Hey everybody, and welcome back to another edition of Beers with Boyer and BJ. We are coming to you from the top floor of the Fountain Mortgage, the beautiful Fountain Mortgage headquarters here in Prairie Village, Kansas. I'm Dan Boyer with Fountain Mortgage. This is BJ Erstry with REMAX Elite. And I think we've got I'm excited because we're not doing an IPA today. I love IPAs, but I'm excited about what we're talking about today. So what is it?
We stopped off at, the Brew Lab. We stopped off at the Brew Lab. It's at 7925 Marty in downtown Overland Park, and talked with Kevin. Basically, back in 2013, him and three friends were sitting around drinking beer and kind of hatched a great idea, which I kind of thought was funny because that's how this came about.
Yeah.
But we were drinking the Flint Hills Hoppy Wheat. It is a Pilsner wheat. It's supposed to have fruity notes and a nutty undertone. I have no idea exactly, but
it's excellent. It really is. Has a bit of a resemblance to like a Boulevard wheat.
Yeah.
But a little different flavor to it.
Yeah.
A little more, I guess, that fruity flavor like you're talking about. It's pretty good.
I like it. That's an easy drinking.
That is.
Anyway, so it's a good place to go. It's a cool facility, and they've got a lot of beers to choose from. It's definitely worth stopping by, and supposedly, the people at the bar told me the food is fantastic.
Cool. So what else are we talking? So what are we talking about today?
Well, you and I talked last night. I had a client that popped up, and she had reached out to me through the internet and asked for me to give her a call about buying a house. And between her contacting me and me reaching out to her, she ended up talking to her daughter, who had been a lender a while back. She called her daughter up and said, "Hey, I'm calling this guy. We're buying a house." And the daughter told her, "Do not buy a house right now because you're going to overpay like crazy. And in 4 to 5 years, this market is going to tank, and you're going to be upside down on your house, and they're going to come foreclose on you, and you're going to lose everything." So it took about 35 minutes for me to kind of explain the situation between 2008 and 2009, the whole craziness that went through, and today. And I did tell her that her daughter was half right. The houses are going really pretty quickly, and they are going over asking price when they're fresh off the market. But there were a lot of reasons why her daughter was not really correct on her assessment that it was going to.
So the daughter felt like there was going to be a housing bubble or a market bust, basically, and all the prices were going to come crashing.
Because it was just rinse, wash, repeat, and we were back into it again. And I explained to her that it was not that case, that this one has been caused due to a lack of housing inventory, not by...
Well, you and I have talked a lot about this,
Yep.
and I think what we want to kind of talk about today is that neither one of us, and we don't. This isn't just our own opinion. This is based on some research that we've been doing, but we both don't feel like there's going to be any kind of a housing correction or a market bust.
Right.
Barring any type of craziness in the world, that type of thing. But so I went through and I kind of put down. I want to talk about some of the differences between 2008, when we did have a housing market crash, when the prices came tumbling down about 30%, or it was pretty more. Yeah, or if not more,
depending on where
we're at today.
Yep.
So you talked about the first one, which is inventory. So if you go back to 2000, the mid 2000s, before the market correction, there was a surplus of inventory. Builders were building homes as fast as they could. They had as much money available to them to build homes as they wanted. In today's market, it's completely the opposite. There is a lack of inventory, right? So builders don't have the lines of credit available to them that they had back then, so they have to be more selective in how many homes they can build. And quite honestly, they can't build them as fast. The housing production right now is nearly half of what it was back in 2008 on the new side, which obviously makes a shortage of the pre-existing homes, because to get a pre-existing home, somebody's got to build a new home, right? The other thing that the prices. So pricing is a big deal. Everybody says, "Oh, there was a huge run up in pricing before 2008, just like we've got going on right now," and that's correct. But it was artificially being driven up. Prices are being driven up right now because of lack of inventory, that supply and demand issue.
Yep.
When there's not much supply and there's a high demand, which we have right now, that raises up the prices. The other thing that I think, and this one is personal to me, being on the lending side, but one of the things that really caused a lot of this was the predatory lending or bad lending that was happening back in the day. As an example, they had loans, believe it or not, that were what you call a negative amortization loan. So what does that mean? It means it's an interest-only loan. So the only thing you're paying is interest. You're not ever paying towards the principal. And on some months, if you didn't want to, you didn't even have to pay all the interest. So most people, as they make house payments, there's a portion that goes to principal and a portion that goes to interest. Well, on these, it was all interest, and as a matter of fact, the balance went up, it wasn't going down. So the value of your house goes down, your balance goes up, that's just set up for disaster. I think the other thing too is the subprime lending that was happening. Pretty much anybody could get a loan back then. You know, you didn't have to have documentation, you didn't have to have job time, you didn't have to have, most cases, money down.
Yeah.
It was too easy to get a loan, and pretty much led to a disaster waiting to happen. You know, the thing to think about now too is they were using a lot of adjustable rate mortgages back then. Right now, I think I read a statistic said only about 4% of all mortgages on the market right now are adjustable rate versus a fixed rate. So a lot of people were having a scenario where they got into a house payment of $1,200 a month. The adjustment period came, and all of a sudden their house payment, you know, skyrocketed. $1,800 and couldn't afford it.
Yep.
So, you know, again, that was bad lenders putting them into mortgages that they probably shouldn't have been putting them into. So, you know, the other thing I want to talk about is the buyer profiles. So obviously we've had a lot of correction in the lending world, which has led to a different buyer profile for mortgages. What I mean by that is the average credit score is much higher than it was back in 2008.
I think it was like, it was like the low to mid 600s back then, and I think we're
over 700.
Yeah.
And a lot of that also, you know, that has to do with requirements. They're just not lending as freely to the lower credit scores. You know, the other portion of that is cash. People have more cash in the bank today than they had back then. So when an emergency does come up, it's not so dire, and they're not, you know, losing their home based on that. And then the other thing I think that, you know, is equity in the home. So that cash turns into equity. So even if there were some type of a correction, you know, not many people are going to see that house drop past their equity line in their home and have the short sales and foreclosures that we had back then. So, and the last thing I will say about it, you know, if you think about what's happening right now, so people may or may not know this, but when we went into COVID, they put on a deferment program for mortgages to where you could literally quit paying your home mortgage for a while if you were out of work. And there's been a lot of talk about how that was gonna work, right? Well, the reality is that program's over. And people are starting to have to make their mortgage payments again. And the great news is most people are doing it. Most of the people are they've either gone back to just making the payment they had originally. A lot of people have refinanced their home with the current interest rates, gotten a lower house payment and started making it again. Well, and there are a few foreclosures out there, but the percentage of the total loans out there, even the percentage of the ones that were in deferment is very low, which is good.
Even what I'm seeing is people who did go in deferment. I mean, the banks have been extremely, I guess, nice in a term that I think they've got a knee-jerk reaction that they didn't want to shove people into a bad situation. And so the banks are working with, and what I'm getting from other clients is when they did go on deferment, the banks are working with it. And so they're not, you know, people were worried all through that, oh my gosh, there's going to be a big balloon payment whenever it comes back if you can't pay it. I mean, it may have happened.
They're restructuring their loans. They're doing everything they can to. Yeah, absolutely.
And I was really impressed and proud with a lot of the banks because we didn't know what was going to happen, and there was always these rumors going. And so I was happy to see that did not go sideways on us.
I agree, and I think there will be obviously some foreclosures that'll hit the market, but I think it's going to be a fraction of what we saw.
No, I agree. I think for the most part, I was afraid that people were going to, during their time of when they were during that program of deferment, that they would just use that money and just get out of the habit of saving that money to the side. It seems like for the most part, the minute that came up, people were kind of prepped for it, and they were ready to start hitting the ground running right when it happened.
You know, the reality too is we did have a lot of foreclosures back then, which also continued to drive prices down. So it's kind of a snowballing effect. As the foreclosures happened, it drove the prices down. I don't feel like we're going to see that.
No, I don't either. And on just a quick ending on this, the nice thing about the market that we're going into right now is back in February, March, we were looking at an inventory of anywhere from 1,800 to 1,900, sometimes 2,000 total homes on the market in the entire Kansas City metropolitan area. And a balanced market is about 9,000 to 10,000. And we are looking at right now, we were up to 4,200 a couple months ago, and we're down a little bit to 38. But I'm seeing a lot of more homes getting rehabbed by investors, and also just thanks to you guys with some of these programs where they're able to keep the home they've got, buy another one, and the risk of, in fact, in the past, when you needed a bridge loan or whatever, that they were afraid they'd be sitting on this house and be making multiple payments for the next 6 to 8 months. Those houses are selling, so it's helping those houses come on the market, which balances the inventory. Plus, the builders are coming up with more houses, and we've got the investors, and so it's really helping the market. I think we're going to have a really good, strong spring market.
I think we will, and I think the good news is everybody that I'm reading is forecasting additional price growth anywhere from 4%. I've seen as high as 13%. We had like 19% growth in prices on housing. I don't think we're going to see 13% anymore. I think we'll see that come down to the normal 3, 4, 5%.
And I'm not seeing, and it still happens sometimes on houses, but I'm not seeing anymore you're walking through and you realize that they're going to get 8, 10, 12 offers on this house that are crazy. I'm seeing now my buyers are up against maybe 2, 3 offers, not the 8 to 12 things we were seeing even before. And so it's the craziness is not there. So people aren't just crazy overbidding to drive. So for buyers wanting to go back on the market, whether it's coming up in a few months or even in the spring market, it's going to be a great market. And
I think the moral of the story is don't be afraid of the housing market. Rates are still low. They are starting to move up a little bit. But the rates are still low.
The sky's not falling.
The sky's not falling. It's a good time to buy a house, and I would be in the housing market right now if I was looking for a home. So
I can sell you one.
Cool. Thanks for everything. Appreciate you guys. Thanks for joining us again.
Make it down to the Brew Lab on Marty in Overland Park.
Have a Merry Christmas, everybody.
Merry Christmas. God, that fire's hot.